We've got declines underway in European markets, erasing much of the advance that we saw last week. Let's head over to London right now, where Lindsay Janis has more for us. Good morning, Lindsay.
Good morning, Eric. It's a fast-moving world. Investors are more than a bit disappointed with the latest developments. We have the Obama administration saying that more banks are going to need bailouts, and GM and Chrysler may, of course, not escape bankruptcy. Take a look at these losses. Confidence has really been shaken. You got the FTSE down 2.25%, erasing last week's losses. Banking stocks are sinking across Europe. UBS may cut more jobs, according to a Swiss newspaper. 8,000 positions could be on the block there as the bank prepares to write down billions more dollars. UBS would not comment on that report. And we've had a fresh wave of nationalization and bank rescues across Europe. Spain has just initiated its first major bailout, with the state taking control of Caja Castillo-La Mancha. Loan defaults have tripled in Spain since the property bubble popped. Unemployment is the highest in the EU at 14% in that country. Also today, the German government, which is in the process of taking over Hypo Real Estate, taking an extra stake in that lender at 8.7%. That's where you saw its shares soaring there. Now to Francine, here in London as well, on the G20 summit. Francine.
Thank you very much, Lindsay. When President Barack Obama sits down this week with his Chinese counterpart, Hu Jintao, he will be coming face-to-face for the first time with his biggest financial backer. Well, more than a quarter of China's $2 trillion of reserves are already tied up in U.S. treasuries, and that figure will need to rise if the new American administration is to achieve its ambitious spending plans and keep the U.S. consumer vibrant. Well, something China needs as well to maintain its meteoric rate of growth. But the rhetoric in recent days has hardly been conducive to a smooth partnership. For years, a butt of criticism about its own currency's value, China has now seized the opportunity to complain about the dollar's decline. Well, China's central bank governor even suggested the dollar should be replaced as a world's reserve currency. Well, this week offers a rare opportunity to mend bridges and build the foundations for more unity between these economic superpowers. But what China wants in exchange for its cash is equality with Washington in economic affairs.
What China has been asked particularly to do is to help increase the funding available to the IMF. The Americans wanted up to $500 billion, and there's talk of increasing it to $750 billion. Now, China and these big countries are not going to give more money unless they have a say over how the money is spent.
Well, getting the U.S. off life support will need China's full backing, but that's not all. Economic understanding between the U.S. and China is now make or break for the whole world's financial economy. So, Eric, will be watching it very closely as things kick off here in London tomorrow.
We sure will, Francine. Big news this week.